Hi, I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. So as we always do, we start with a look at the S&P 500 daily chart, looking at a slightly bigger picture, and then we'll zoom it into the hourly chart. The daily chart here shows you that this market is still very much in a generally rising trend. There was that well-formed triangular pattern that formed into the final quarter of 2020, and that market broke out when it broke above 3,500 in November. That validated that larger triangle structure, which projects up to a target of around about 3,850 to 3,900. Now, the market's not that far away from that target area, but it still has got some way to go to get to that target. And if you have a look, you can see the market's consistently making higher lows and higher highs still. And that 15-day exponential moving average is really providing good support at the lower levels. So it remains a buy the dips market for the time being, whilst the market is above that 15-day exponential moving average. And also you can see there's no significant divergence evident on either the RSI or the stochastic oscillator at the moment. So neither of those are contradicting the bullish action in the market. So overall right now, still a fairly bullish picture for the S&P 500. If we then take a look at the hourly chart of the S&P, you can see here that there's a nice steady upward channel that's been intact for the last month and a bit. That channel, the bottom of that channel comes in at around 3,700, and before that there's some support at about 3,760. Over the last day or two, the market has been bumping up against the upper boundary of that channel. So a little bit of consolidation is what we seem to be seeing for the time being. Not an unhealthy thing that markets don't always go up in a straight line. We need them to consolidate and take a breather from time to time. And it does just look as if that S&P chart is taking a breather on the short-term hourly chart. But overall, the bullish action still remains intact, and one would still look to buy dips whilst that upward channel is intact. If we then move on to the Nasdaq chart, we begin with a look at the daily chart of the Nasdaq. And here, similarly to the S&P 500 chart, you can see a nice big triangle pattern that formed in the latter quarter of 2020. That market broke to the upside when it broke above 12,000. That was a bullish break for the Nasdaq, and the market's been continuing steadily higher ever since then. You can see again how the 15-day exponential moving average here is also providing support into any short-term weakness. And whilst this market's continuing to make higher lows and higher highs, and whilst the price action is above that 15-day exponential moving average, the bias still does have to go to the upside. There is a little bit of negative divergence evident on the Nasdaq chart here, but it's not that severe, and I think for now we've still got to give the benefit of the doubt to the upside. And that broader triangle pattern that I mentioned projects to a target of 13,800, which is still around about 800 or 900 points higher than where the market is trading currently. If we then look at the hourly chart of the Nasdaq, there you can see a nice steady upward channel that's been intact over the last month. The lower boundary of that channel comes in at 12,700. And again, the market's been testing the upper boundary of that channel over the last 2 days, and does look as if it's in a short-term consolidation phase for the time being. But again, that's just short-term consolidation. One generally keeps a bullish bias here whilst that upward channel is still intact. So overall, looking at the S&P 500 and the Nasdaq, both of those chart structures still look pretty bullish to me. There's nice steady upward momentum on both of them, higher lows, higher highs, and we can't fight that trend whilst that is still the case. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.